Breaking news, Donald Trump has just announced that a government shutdown tonight is likely, as no last-minute deals have been reached. At midnight, a US government shutdown will likely begin. The last shutdown lasted 35 days.
This would be the first shutdown since December of 2018. That one lasted 35 days, making it the longest government shutdown in more than 4 decades.
If you're not familiar, when a US government shutdown occurs, funding stops, many federal agencies are forced to close or scale back, employees go unpaid, and only essential services continue. So, what comes next? The general expectation is that a shutdown will hurt the economy, particularly if it drags on. Some even warn it could lead to a recession. While shutdowns are never ideal, they always end eventually. At this point, the shutdown process almost feels like political theater. So, I believe those selling on this news are mistaken. Take the perspective of State Street's chief investment strategist.
Government shutdowns historically haven't meant much to markets or the economy. Brian, the last 6 shutdowns, GDP actually expanded. In 11 out of the last 12 shutdowns, GDP expanded. And in the last 5 shutdowns, Brian, the S&P 500 has actually climbed. So ultimately, this tends to be a big shrug of the shoulders from investors. So I do think earnings are going to be the big story. That's coming up in a couple weeks in terms of the heart of earnings season. The consumer continues to be spending, so that's good as well. And we're going to enter a seasonally positive time for markets if we can just get through October.
Despite September feeling bearish, it's ending in the green, a strong launchpad. Historically, Q4 has been the most bullish quarter for both stocks and crypto. Bitcoin, in particular, could soon make a parabolic move. Historically, Q4 has returned Bitcoin an average of 85%, with a median of 52%. Even a median 52% gain would put Bitcoin at $170,000 by year's end. Are you ready for what could be the best quarter in crypto history? CZ from Binance advises caution. Don't get too excited. This isn't financial advice, but here's what I think for the next 3 months. Would you bet against someone with a perfect record of calling market bottoms? I wouldn't. Even more interesting, altcoins are also surging. Whale wallets are aggressively accumulating XRP at the fastest pace in its history, the most significant accumulation ever seen. This is hard to ignore, even for people who don't like XRP. The scale of accumulation this time really does feel different. BlackRock recently stated, if every millionaire in the US asked their advisor to buy them 1 Bitcoin, there wouldn't be enough supply. And beyond that, AI will likely push crypto much higher. Coinbase head of institutional strategy explains this, and I like what CNBC's Joe Kernan adds at the end.
AI made intelligence scalable and programmable. Crypto is doing the same thing for money and value, and when you put them together, it makes programmable money that can meet programmable intelligence. So this is all MIT lab type stuff, and this is like looking into the future.
Yeah.
What does it mean practically?
Sure. So I love that phrase, artificial intelligence as infinitely scalable intelligence. And if you think of blockchain, which is the underlying technology for crypto, as infinitely scalable source of truth, then those two things work very well together. The simple way of thinking about it is if we are moving to a world where AI agents will not just analyze things for you, will not just give you information to make your own decision, but will potentially be allowed to act on your behalf, then we want those agentic systems or those AI systems to act on true sources of information. It would be disastrous if they didn't. So simple examples could be AI agents not just analyzing your portfolio, but optimizing it, tax loss harvesting, kind of simple rote things. We could live in a world, let's get away from finance for a second. We could live in a world where AI agents are able to conduct, and this is some of the work happening at MIT that we talked about earlier. We could be living in a world very shortly where AI agents are conducting screenings for cancer treatments. And the process of doing that involves maybe the purchase of data sets. And a scientist could do that 5 times a day. An AI agent could do it 5,000 or 5 million or 5 billion times a day in theory. For that AI agent to purchase that data set to do that experiment at that scale, to ask it to rely on 100-year-old financial rails, it's sort of like trying to stream K-pop Demon Hunters on a 1994 dial-up modem. It just simply doesn't work. So if we're going to move to this world and have this wonderful advantage of these agents acting at infinitely fast speeds, they have to act on infinitely fast and scalable money rails. And that's what blockchain and crypto is.
Bitcoin has come a long way from Beanie Babies when you talk that way, has it not?
Look at gold. It's hitting record highs. This is bullish for Bitcoin, which sometimes tracks gold, sometimes tech. What's clear is that people increasingly recognize Bitcoin as digital gold, offering advantages gold lacks.
Last time I was on, we were talking about the decoupling of Bitcoin with tech stocks and its outperformance relative to gold. Mm-hmm. Now we've seen year to date gold doing really well, up 46% or so. Bitcoin doing well, up about 21%. Ethereum up about 25%. So it's decoupled in the opposite direction. But push back year on year, gold's up about 44%. Bitcoin's up 75%. Ethereum's up 58%. Mm-hmm. And even if you look at something like the Coin 50 index, a basket of crypto, that's up about 72% year on year. Now, if you go back 3, 5, 7 years, there's no question which is the better asset to own. But here's the rub. Here's the crazy part. You don't have to choose, right? This isn't a who's the GOAT, Jordan or LeBron conversation. Bitcoin has characteristics gold doesn't. It's programmable. It's digital. It's infinitely scalable in terms of movement. Easy to move. You don't have to lug gold across borders.
Right, insured.
And most importantly, I would argue it produces yield, where gold has a negative cost of carry. So if you're one of the people who are genuinely concerned that global money supply grows like 7-8% a year, and that's excessive, if you believe that's excessive and that's causing inflation, then you need assets that will beat that. A couple $1 trillion was sitting in money markets because at 5%, 4.5%, 5.5%, that's nice. You're getting close to beating your target inflation rate.
Yeah.
As rates tick down, that unlocks those assets. Now, all of it's not flowing into assets like Bitcoin, but a portion will. That's what makes us bullish.
Michael Saylor argues Bitcoin will succeed where gold, worth $22 trillion, has failed. Some predict Bitcoin could eventually capture half of gold's market cap or surpass it.
If you think about gold and why gold failed, one reason gold failed is it's so incredibly difficult to custody. And so if you look at in the history of gold, in the 20s, you had 4 great central bankers, and the central banker in Germany was Schacht, and the central banker in the US was Ben Strong. And the world, was substantially on a gold standard, and the Germans had gold. And the French had gold, and the British had gold, the Americans had gold, but for the most part, the gold was either in London or in New York. The French gold was with the British or the Americans, or the German gold was with the Americans. So there's a famous story where Schacht traveled to New York City, met with the head of the Fed, Ben Strong, and Ben Strong wanted to show him the German gold, took him down into the basement of the New York Fed, and they couldn't find the gold. And of course, the message of the story is this. Gold is so difficult to custody, countries couldn't figure out how to, like the entire country of Germany couldn't figure out how to custody their own gold, much less the 100,000 companies in Germany or the 60 million people in Germany. And so the reason gold failed was it was too slow and too difficult to custody, and therefore your property rights were always going to be impaired by a central actor.
So, looking ahead, September's candle is closing. October, sometimes called Uptober after a rectember, could be bullish or volatile due to short-term shutdown news. But that should pass, setting up November and December for massive moves. True Bitcoin OGs are defined not by how much Bitcoin they hold now, but by how much they used to hold. This time is different. People understand Bitcoin's potential. The key takeaway? Don't sell too early.
For you personally. Honestly, what I think about? I actually think about all the Bitcoin I sold.
Oof. Yeah,
I had Bitcoin. I had a bunch of Bitcoin in my funds when I managed outside capital.
Bitcoin and things like it is the equivalent of the red pill. Okay? We are entering a completely world of uncharted water right now.
Have you made any investments in Bitcoin?
So, I mean, I personally own Bitcoin in my hedge fund. I own Bitcoin in my fund. I own Bitcoin in my private account. It is a huge deal. It's a huge, huge, huge deal.
You know, that's a $3 or $4 billion mistake and growing now, because my partners at the time capitulated and I wanted to be a good team member, and we distributed and it was profitable, but obviously I shouldn't have sold it. Would have made them a lot more money.
My name is Kalen. Q4 is set to be huge. Prices are consolidating at all-time highs. Subscribe to the channel, join our team, we give you the edge in crypto.